But I was really answering about whether you could see it in wages right now, and I thought that was hard to do. I think, so growth averaged around 2% for 8 years, and then 2017 it was, I think the current estimate is 2.6%. And you saw significant improvements in household and business confidence levels, overall confidence about the economy. You saw that coming on in 2017. Some of that was probably in anticipation of the passage of what finally passed. So that was already in the growth rate. I think it's hard to say, but I suspect that some anticipation of tax cuts and tax reform was already in the growth in 2017. Going forward, and we've said this, we expect, there are a range of estimates on this, but we would expect that the tax bill and the spending bill would provide meaningful support to demand for at least the next 2 or 3 years, maybe 3 years, and also might have effects on the supply side as well. To the extent you're encouraging more investment, you're going to get higher productivity. So these estimates are subject to tremendous uncertainty, both as to amount and as to timing. But I think we look at the range of estimates, and that's certainly where we broadly come out.
I just want to be clear: that tax bill had a positive impact, even if it's the anticipation of the tax bill. It had a positive impact on our GDP growth. Correct?
Yes, I think so. This year, maybe last year too.
Okay, let me ask you this with regard to trade. You make note specifically in your comments on trade and the fact that there are some things up in the air right now. There is some perhaps instability or some questions on the part of not only our businesses, but businesses around the world. Are businesses looking for stability with regard to trade compacts, or are they looking for opportunity and instability?
Well, they'd clearly be looking for stability.
Okay. And then I would like to associate myself, and I support what Senator Scott indicated earlier with regard to the insurance issues and the fact that our state-based regulatory system for insurance, I think, is critical. I think it's a positive thing for consumers when it's as close to that state regulatory process as possible. When you came here before the committee earlier this year, you discussed capital requirements in the options market and mentioned that the Federal Reserve was working on a rule to transition from the risk-insensitive current exposure method, or SEM, to the internationally agreed-upon standardized approach for counterparty credit risk, SACR. I'm supportive of these efforts, but I remain concerned about the timeline for implementation. I noted with concern in a letter to Vice Chair Quarles last year, in response to my request that the Federal Reserve use its reservation of authority to grant interim relief, Vice Chair Quarles asserted that the Fed lacks such authority in this context. I originally raised this issue when Vice Chair Quarles was testifying at his confirmation hearing last July. Unfortunately, it's been a year since that time, and the Fed has yet to take meaningful action. I remain concerned about this because the longer we wait for American regulators to implement SACR, the more market makers will exit the options market entirely, making our financial system more vulnerable to economic shocks and less competitive compared to our international peers. I noted in the Basel Committee's last progress report from April of 2018 that 22 of the 27 Basel member countries have either implemented SACR or made substantially more progress at implementation compared to the United States. I'm a particularly strong supporter of a risk-based capital standards, particularly in this context in options markets. Can you provide an update on when the rulemaking from SEM to SACR will be released?
I know that we're working on it now. I know that we think it's good policy, and I can't give you an exact date, but I know we're actively drafting a rule, and by not being able to provide interim relief, all we meant was we actually have to amend the rule. So we'll be putting a rule out for proposal and get comments, and then it'll go final. But it's in train, but these things take time. We're working on it.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.